Good morning. Thanks for joining us. We are here to talk with Rapyd, the world's largest local payments network. We've got Arik Shtilman and Arik Rosenthal joining us. I'm Ginger Schmeltzer from Aite Group, and I'll be moderating our discussion this morning. Arik and Arik, can you introduce yourselves?
Sure. So my name is Arik Shtilman, and I'm the CEO and one of the co-founders of Rapyd.
Good morning. I'm Arik Rosenthal. I'm the General Manager of Rapyd here in the Americas.
Wonderful. Thanks to you both for joining us this morning. I am pinch hitting for the original moderator, so I'm hoping our session will go well, and I'm looking forward to our conversation. So let's just start out a little bit with tell our audience about Rapyd's story. How did you guys get started? Where did the idea come from, and what is it that you are bringing to market here?
So the idea behind Rapyd actually was completely different. When we started Rapyd in 2016, we were a group of people with no clue in fintech or in payments, and we wanted actually to create a consumer-facing wallet product that will compete with PayPal, but that will be built on alternative payment rails, not on the traditional Visa and MasterCard rails. And when we went into this venture and we tried to build that product, we stumbled into every single problem that exists on planet Earth when you're trying to create some kind of a financial product for consumers. From the fact that you need to be regulated, to opening bank accounts and doing business globally and different regulators. And after 6-7 months into the project, we understood that the world is so diversified and there are so many different ways to pay that are not Visa and MasterCard. And every country has its own regulation and its own requirements. So we stopped and we looked around the market to see if there are actually platforms that we can build our solution on top of. And we were quite shocked to see that basically there are no platforms in the space. And every single company is rebuilding this payment infrastructure again and again from scratch. So we decided to pivot the original idea into what Rapyd is today, which is basically a global platform that allows other businesses to build on top of us different types of fintech and payment applications. So for a business in the US, collecting a payment or doing a payout in the US versus doing it in Europe or in Indonesia or in Brazil will look seamless and exactly the same.
Now, that's an incredibly complex set of offerings. How did you get from the concept to where you are today, where you have the capabilities broadly across the globe?
So it started with, a lot of whiteboarding, of understanding, how the world works today and what we can do differently, and thinking outside of the box, not like a traditional financial institution, but like a startup. And we originally started to do business in Europe, and later on, with the help of Arik, we went into Latin America and into the Americas region, which includes quite a lot of countries. And then we scaled up to Asia Pacific. Technology is the core aspect, of what we do, because we basically automated probably 90% of everything that is related to money movement, compliance, regulation, AML, and sanction screening, which is one of the main things that, become a challenge when you do this cross-border business with all the requirements. And I think that Arik can speak a little bit, about some of the challenges that we saw when we went into countries in Latin America, for example.
Most definitely. I think that there's two sort of elements as it relates to what the challenges we confronted. So in the Rapyd model, we have two sides of our platform. We have the side of the partner networks that we work with, all the different payment gateways. And the problem that you confront there is that even in a country such as the US, where you would want to solve collecting funds, you have ACH, you have cash, you have cards. And then once you expand into the rest of the region, or in that matter, the rest of the world, what you realize is there's so many different partners, and they all have a completely different approach to how they're exposing their platform for external integration. So there's a significant technological problem, as well as a fairly complicated contractual and regulatory problem that we've overcome by confronting and standardizing that. From a perspective of what is the side of the platform, which is who we serve as our clients, or what we sometimes call merchants, although we serve banks, we serve challenger banks, we serve e-com companies, we serve marketplaces. The problem that they confront is that as they're leaving, particularly the United States, the vast majority of the world does not have a card. Generally speaking, less than 6% of the world has a credit card, and then many of the world that actually has a debit card, those cards were originally designed for ATM transactions. So they're not designed for online transactions. So if I'm a company that's trying to collect payment across Latin America or Africa or Southeast Asia, what I quickly discovered is, while certain platforms and payment processing platforms will allow me to process cards, it really only allows me to address anywhere between 10 and maybe 30% of the total addressable market. And these are not people that are necessarily unbanked or even underbanked. They're just people that don't have credit cards. So we also overcome that issue for many of our merchants as well.
And what is it that you offer? And give us some examples of some markets where credit cards are less used, and what kind of payout options do you provide to those merchants?
Yeah, so there's two things that Rapyd does in the broad sweeping terms. We have a collect network, which we call actually the Rapyd Collect, and as well as Rapyd Disperse, which is our disbursement network, which is very unique in the market to have a platform that can provide accounts receivables and accounts payables capabilities inside of the same platform, which is particularly interesting when so many different companies are in some way or fashion building marketplaces or ultimately intrinsically are marketplaces. The type of payment methods that we offer are cash, bank transfers, real-time payment networks, local card acquiring, where we can actually acquire card in market as if the acquirer was residing in that market, which not only increases the approval rates, but also makes it significantly more effective way of acquiring or collecting that transaction. Mm-hmm. From a disbursement perspective, we also include bill pay as a means of dispersing payments. Many people want to be able to direct the funds, not actually to a bank account, but instead want to get paid in a way that they can just pay an electricity bill, as well as airtime. So broadly speaking, if you think of a company that is trying to build a fintech solution, sort of what are more, let's just say, advanced clients, they begin to use our platform across multiple countries and or multiple capabilities. But just even a e-com company that says, I want to be able to transact with Brazil, what they quickly discover is most people don't have a card. If they do have a card, they're most likely using Elo or HyperCard, which are locally issued cards. Mm-hmm. And in many cases, people are preferring to use Boleto and as a primary means of payment. So broadly speaking, I think what we find time and time again is that the level of education that you need to provide merchants as they quickly discover that once they leave their primary market, that the world becomes incredibly complex and to a certain degree fragmented.
And so if I'm an e-com player and I want to start selling outside of my home market, why would I pick Rapyd? Like, how would I find out about you, and why would I pick you over, another player that might be able to provide me a similar service?
So there are several answers to that. First of all, there is nobody that will provide you a similar service because today we are by far the world's biggest global payment network, right? We serve not only Latin America, but also Asia Pacific, Europe, the US, and Africa. So today, finding a single company that with a single integration and with actually a single contract and a single API call will allow you to serve all these different markets, it's only Rapyd. Second thing is that we're quite unique in the fact that we also move the money. So we are a regulated entity. We're able to actually collect the money, move the money, make sure that everything is done in a compliant way. And we're positioned in a very unique way to be able to support all these global markets and provide, variety of payments from, like Arik mentioned, the cash to local card acquiring to wallets in Asia Pacific, both for on-demand payments, subscription payments. So we position very well in the market today. And basically for a company like an e-com company to find something that will compete with Rapyd, they will end up integrated probably to 5 or 7 different companies in order to recreate the Rapyd experience, which is quite an expensive task.
Yeah, not just expensive, but most small businesses don't have the time or the energy to seek all that out themselves. Not to mention the finances to be able to pay for it. So how would I, as an e-com company, find Rapyd? Do you sell through partners? Do you sell direct? How does that come together?
So there are several ways, right? So first of all, we have a sales force that does the enterprise sales that is located, in the regions that we operate in. So we have a US team, an EMEA team, an Asia Pacific team, and of course we go out and find accounts and clients, and we also do traditional marketing and meet them. But we also have what we call a channel strategy. So we have plugins to shopping carts like Shopify, WooCommerce, Wix, and others. So smaller companies can actually just find us online and basically with a single click integrate their own e-commerce website into the Rapyd experience, and literally in a matter of less than 30 minutes they can be up and running and collecting payments.
30 minutes, fantastic. So you have a very quick onboarding process as well.
Yeah, and one of the biggest advantages of our platform is the self-service onboarding capabilities. If you are a small to medium-sized merchant, you can open a Rapyd account and start transacting with Rapyd literally in a matter of minutes, regardless of where you're located around the globe.
Fantastic. That's a pretty critical piece of the puzzle these days. So let's talk about what's happening now, right? So COVID, of course, has accelerated digitalization of everything across the globe. What are you guys seeing for your business? How has that impacted payments flows, onboarding, the interest in your business, et cetera?
I think that we see several interesting things, and I will let Arik talk later on regarding some of the trends in Latin America and America specifically. But what we saw is that in the beginning, around the March timeframe, there was a lot of panic in the market and nobody understood where it is going. And then suddenly, in the middle of April, there was a massive spike with the number of new accounts that were opened with Rapyd, because a lot of businesses moved from traditional, point of sale businesses to online. And also people needed to diversify the countries that they operate in, because some countries had lockdowns, they had to sell cross-border in order to start collecting money. So we saw a massive spike, on our business, on our side. From a payment method perspective, of course, we saw a significant decline in cash-based payment methods because of the lockdowns and the fact that people that were traditionally paying with cash were not able to go out, and pay. So new payment methods like the local wallets that exist around the globe, the online bank payments, and also cards spiked up versus, cash. But lately, what we've seen is that some of the trend is coming back, and in the markets where cash is king, cash is really picking up back into the same numbers that it used to be. So changing consumer behavior is complicated. Even if you're a very dangerous virus, you're not going to change the behavior so quickly of how people prefer to pay. And I think I will give Arik also the opportunity to talk about some of the key markets that we have and the trends.
Yeah, just to follow on Arik's point with regard to cash is, I think the most interesting scenario that we've experienced in the past 6 months is we are working with a very large CPG. So broadly speaking, many people might think of Rapyd as an e-com platform, and Rapyd is not really an e-com platform. It's an e-com platform, but it's also a global treasury platform in the grand scheme of things. We're working with a very large CPG that probably for years, probably more than a decade, has been going and talking to their bank about figuring out a way to remove cash from their supply chain. Because most CPGs, particularly in emerging markets, the way that they collect payment from mom and pop stores is they physically send a truck around to the store, drop off the goods, and pick up the cash. Well, when those stores are either not open or drivers don't want to drive, or in some cases, if you have dry laws, which has been very common throughout Latin America right now, is removing alcohol sales entirely to try to restrict congregation of people, you have a very unique cash management and cash collection problem as a global CPG. And as a result, we've actually seen that they recognize that mom and pops do need to pay in cash, but they can no longer send drivers. So what they've actually done is use Rapyd's connectivities to retail locations, meaning convenience stores, supermarkets that have remained open throughout the entire COVID period, and are laying consequently the foundation very, very quickly to instill the behavior of using a digital payment method and actually kind of providing the point of transition and conversion between a cash payment and digital payment. I think that broadly speaking, when people think of cash, they think of the cash payment that's done at a mom and pop store, at a coffee shop. But what they don't realize is that when you have a cash register or when you have a digitally connected platform, a cash payment is actually, call it the entry point for a digital payment, because you now are associating someone's identity to that cash payment. So that's a really interesting trend. I think the second thing that we've also seen, broadly speaking, is that a significant amount of investment and understanding across the world from our merchants that are ultimately went from this point of retreat in March and April to a point of very aggressive expansion, of understanding that whoever's investing now to either expand globally or to expand into new markets, even just saying people that otherwise they were not able to transact with, they will emerge much stronger. So I think another trend that we're ultimately seeing is not only new accounts, but significantly more openness to think out of the box as they're planning for the world post-COVID.
Well, not just an interest in it, but a necessity, right? The world is changing, and in order to maintain their business levels, they've got to think bigger. I think it's interesting, though, we think about cash as a consumer payment method, not so much as a B2B payment method, but it's a really good a really good kind of angle on that. And Arik, you had said that we're kind of seeing a shift back towards cash payments by consumers. Arik, I'm curious if you think you're going to start to see a shift back towards cash payments for B2Bs as well, given the push towards digitization that you're working on in some markets.
I don't think we're necessarily going to see a push towards cash or a push towards check if you're in the US, where obviously check is a really big deal. I think that what you're going to see is a significant realization that attacking these particular payment methods that people want to get rid of can now be attacked in a variety of different methods. So two things that I've always said is that one, most of the market for many, many years has always said, let's go figure out how to get people bank accounts. So let's get people that don't have bank accounts, that are underbanked or unbanked, and get them bank accounts. With the proliferation of other digital platforms, people that are on freelancer platforms, that are on gig economy platforms, that are actually in some way or another, they're actually transacting digitally, they actually have kind of the entry point into the world of digital transactions. And those services don't necessarily need to be provisioned by financial institutions directly, maybe indirectly behind them. And the second thing that people are recognizing is that the path to getting rid of these payment methods has to change. So rather than saying stop using cash and let's give you a debit card, stop using cash and let me give you a credit card, I think that what we're realizing is that the transition in some regards will happen very indirectly. How do I actually embrace the fact that you want to use cash, but build a bridge between your cash payment and a digital platform? And then once I've actually built that bridge, fast forward a year, fast forward 2 years, you now realize, well, I have something that's stored value. I have something that's actually a wallet. I have a transactional history, and now I can actually obtain certain financial services I couldn't obtain before. And then suddenly you wake up one day and realize maybe I don't actually need cash. I think that the way that we've sort of confronted the enemy of cash and checks in the past has been a little bit too confrontational rather than transitional.
And organic, it sounds like as well, kind of just letting them kind of see the value of it and then kind of slowly but surely adopt it. So as we're going through this kind of transition and things are going to, swing, the pendulum is going to swing back a little bit, but probably not all the way, as you guys have said. Looking forward over the next couple of years, I mean, no one has a crystal ball, but what are you guys seeing for your business and for how these trends are going to evolve? How are you going to meet those trends and continue to push the business forward?
So I think that there are two trends that basically Rapyd follows. First of all, it's the global trend with the fact that a lot of stuff is going cross-border, and cross-border has a massive need, especially post-COVID, where people understand that even if they do business in a specific country, they need to be able to do business in multiple countries just in order to de-risk their business. So the fact that we have basically global coverage and we continue to expand our coverage is super critical, for the future growth of the company. This together with the variety of services that we offer. So we're not only a payments company that does payment collection. Like Arik mentioned, we have unique capabilities of both doing collection and disbursements and even issuing. So we do card issuing in quite a lot of markets. The combination of these services basically allow us to serve clients for a variety of their needs and really to support very unique business models and capabilities that some of the merchants are asking us. And I think this is a critical element in the growth story of our business.
Sorry, Arik, go ahead.
I think the only thing that I would add is that that while we would hope that there would be more of a greater concentration of what we call in technical terms of endpoints, what are all the different ways that people are going to be able to transact in. As a developer or as a business person, you would hope that there would be less and less, there would be greater consolidation. I think there's going to be a significant consolidation of the type of companies that clients are working with. But I don't think that necessarily we're going to see a consolidation in payment methods. I actually think that we're going to see a proliferation of more and more payment methods. The emergence of real-time payment networks, there's now, I think, more than 60 different initiatives across the globe. And Rapyd consequently is embracing that and saying, well, what we're going to do is we're going to integrate, and we already have integrated to dozens of our real-time payment methods all over the world for collections and disbursement. We embrace that. What we are excited about is the ability to actually standardize that interaction and experience for the developers and for our clients. So I think that one of the other major trends we're going to see is that if we're now at close to 2,000 payment methods that exist in the world, I think that the numbers in this only increase over time.
Yeah, no, I would agree with that completely. We've got a couple minutes left. I wonder if you guys have a particular merchant or a case study that you could highlight, a success story of someone that's worked with your network to enable their business as we wrap up.
You want to choose one, Arik, or you want me to choose one?
No, you can choose one.
So rather for respecting of the merchant's confidentiality, because many of our merchants prefer that they remain under the radar, I think there's two use cases that are super interesting. So one is we do have a client that is using a global issuing platform across more than one country. It's very, very unique. I think there's lots of processors out there and many processors that can say that they can transact across more than one geo. There's not really any global program managers that can actually provide you with a BIN, provide you with the bank accounts, and provide you with the technical connectivity to successfully issue cards through an API by basically just saying Brazil, Mexico, issue card, get required fields. So we have a gig economy platform that does use us to do that. They're using us so that they can get cards in the hands of their shoppers, which you can imagine as a grocery delivery platform has experienced enormous growth over the past 6 months in light of COVID. That's a great use case. I think that is super unique for Rapyd to be able to do that. I think the other merchant that is very interesting for me is many of the global e-com companies have reached a point of saturation. So we have another client, which is a very large marketplace e-com company, reach a point of saturation to a certain degree in the US market. And as they're now expanding into new markets, they're using us across 38 different countries and 75 different payment methods. So that consumers in these markets can actually transact on their platform. And this is one that has been around for the better part of 10 years. So one, you would hope that they could have gotten there faster, but then you also recognize that if they're going to experience the next wave of growth for the next 10 years, they can either wait for people to go get themselves credit cards and debit cards, or they can finally resign to the fact that they need to integrate and transact with the people that in the way that they want to be able to transact.
Absolutely. Thank you, Arik and Arik. Thank you so much for the time. This has been a great overview of Rapyd, and I'm sure our audience has really appreciated learning more about your company. Thank you for your time.
Thank you.
Thank you very much.
Have a good day.